Guy, what's your quick take on
big
this?
Numbers? I mean, and the Capex guide is clearly not scaring anybody. I'm sure NVIDIA's higher as well. Here's my quick take. It is a very strong quarter. And, I guess the rumors of the death of Google 6-7 months ago were obviously greatly exaggerated. But the problem, I think, now is back then you can make a very compelling valuation case. Now, not as much. So at 31 times-ish, I'm not saying you got to get out of Google here, but I think you have to be aware that valuation is probably priced almost to perfection.
Unless you look down the pike and you think that additional spend, all that extra spend is going to make the monetization of all the different parts of its business that much stronger.
Well, and you look at the little glimmer you got of it in this last quarter, and again, on a price to earnings growth, so on a PEG ratio, that 30% growth against, a 30% multiple on the trailing gets you to a really actually attractive PEG ratio. I think the numbers that were shocking here, that cloud growth number, and I realize it's not as sexy of a business, but at a time when the cloud competition is heating up, I love to see that 47%. I do think that the dynamic around search, though, their core business, that bogey, first of all, the bar was really high. The bar was 16, which was significantly higher than they were, and they come in at 16.7. The core business, we all know what Gemini seems to be doing. I love the Apple talk. I think this is good for Apple, too, which is also, at some point, when we talk about the market, we can talk about Apple's defensiveness. But I just wonder what the stock would be doing if they actually came in line on the Capex. I wonder how high would it be?
Very same question to an analyst.
Yeah. What'd he say? He doesn't know. He's not on Fast Money. On Fast Money, we actually played through that. And my guess is this stock would have been up 5 to 7%.
He likes that Capex number. He likes it. It shows confidence in what they're getting out of it.
Yeah, I tend to agree. The Street probably would, kind of reward them a little bit more in the interim if they had scaled it back just slightly. But again, I do think that is kind of a sign of good faith going forward. The last thing that I want to mention is the margin defense here, up around 30%. I mean, that was another concern that you had coming into the print. And I think they're hitting on all cylinders. The last thing I'll say is that this is pretty much a fully integrated stack company. You have TPUs, you have the defense of ads were okay. YouTube ads were okay, but you have search that was essentially defensible. You have margins. You have the robust cloud growth. I think it's kind of setting up as a very well vertically integrated firm.
Well, I think the market's response is the answer. It's barely up, right? So the stock was $350 2 days ago. It's indicated now in the aftermarket.
I feel a pair of twos are coming.
$339.
Really?
So
holding on to these gains.
No, what gains? Wait, 2%?
No, holding on to the year-to-date gains.
Wait, hold on. The 2% gain?
No, not the 2%.
Okay, which one?
The gains year-to-date.
But here's the point. On the tariff low, there's $140. It's now $355. Yesterday's high, $350. We just got a good number, all cylinders, and which is true. But the market is saying it's come too far. It's full. I would sell calls against it or trim my longs.
Would you agree with that interpretation? Because that's a glass. I feel like that's a glass half full.
That's just
interpretation.
I
feel like the glass half.
I'm the half full guy. I'm the half full guy all the time.
Half full is that it is enough to hold on to the gains that it's made over the past few months.
What Tim will say correctly is some of the parts of the stock's a lot higher. He's right to point out that without the Capex, where is it? But valuations, I think, sort of do matter. And just to sort of play the other side and sort of line up with Carter, all we've done here is get back what we lost today. So we're pretty much where we started yesterday, to Carter's point.
Selling calls and trimming a position that's run a lot is what I was doing over the last couple of days, both for myself and for clients. I just think you're not going to feel bad taking a little off the table. In the tape we have for Google, especially because that position has become oversized for most people, I think you have to be careful about that.
Here's a question that I have based on Alphabet's report. Is this actually a stamp of approval for the AI trade across the board, or does it make other players look relatively weaker, relatively less well-positioned than Alphabet?
I think it's a good thing that you see that Capex guide higher is significant.
Good for everybody.
And it's good for everybody.
For the hardware, for the
100%.
But for a Microsoft, for an Amazon.
I think software is its own animal right now. We'll have that conversation. I will say this as well. What I heard from Jensen Huang over the weekend might in some ways mitigate what we're hearing from Google in terms of the sanctity of the spend that they were talking about 6 or 7 months ago.